XRP just hit a technical oversold signal that hasn't appeared in months, and the AI models are going absolutely bullish about what comes next. Let's break it down. Here's where we are right now. XRP is sitting at $1.02, down about 2% in the last 24 hours. Now, I know what you're thinking. Another red day, right? But here's the thing. Sometimes the best opportunities come disguised as bad news. The trading volume is still healthy at 58 million XRP, which tells me people are still very much paying attention to this market. You know what I've noticed? The RSI just dropped to 38.90, which puts us right in oversold territory. Here's why this number matters. When XRP gets this beaten down technically, it usually doesn't stay there very long. The MACD is still negative at minus 0.0186, but, and this is interesting, the selling pressure is actually weakening. We're also finding support right near that Bollinger Band lower bound at $1.01. That's like a safety net that's been holding pretty well. Now, here's what's moving the broader market today. The dollar has been showing some weakness, and this is actually great news for XRP. I've been watching this inverse relationship between XRP and the dollar index, and it's sitting at minus 0.72 correlation. So when the dollar goes down, XRP tends to go up. Simple as that. On the regulatory front, well, we're not seeing any major headlines today, which, honestly, sometimes no news is good news. But I did notice something in the ETF flows. We're seeing about $20 million in outflows across XRP ETFs. Now, this is a bit concerning for short-term institutional sentiment, but it also means less selling pressure ahead. The mood right now is, let's just say, not great. The Fear and Greed Index is sitting at 30, which puts us firmly in fear territory. But you know what I've learned over the years? When everyone's scared, that's often when the best opportunities show up. XRP search trends are only at 39, so retail isn't exactly rushing in either. The big players are doing something interesting. We saw 1,095 whale transactions moving 792 trillion XRP. That's a massive amount. Now, this probably contributed to today's price drop, but here's the thing. When whales finish their position adjustments, that selling pressure usually disappears pretty quickly. In plain English, we're at the tail end of what Elliott Wave folks call a C-wave correction. Sounds fancy, but it basically means the selling might be almost done. The Wyckoff analysis suggests we're in what they call markdown phase B, which typically happens right before the smart money starts accumulating again. So what does the AI think? This is where it gets exciting. The AI models are showing some seriously bullish predictions. Short term, we're talking 1 day. It's predicting $1.42. That's a 39% jump with over 90% probability. Wait, that's not even the best part. 7 days out, $1.59, which is a 56% gain. And here's the kicker. 30 days from now, the AI is calling for $1.75. That would be a 71% surge from current levels. But here's what could go wrong. We're still sitting below all the major moving averages, which creates some technical headwinds. Those ETF outflows could continue putting pressure on price. And if the broader stock market crashes, XRP tends to follow it down due to that correlation I mentioned earlier. Here's my take. This is a gradual accumulation opportunity. The technical oversold conditions combined with those bullish AI predictions, that's a pretty compelling setup. I'd be looking at $1.02 as a primary entry point, with a backup entry at $1 if it dips further. For risk management, I'd set a stop loss at 95 cents. First target would be $1.42 based on that 1-day AI prediction, and if momentum continues, $1.75 for the final target. The risk reward here looks pretty solid to me. That's it for today. If this analysis helped you see the bigger picture, go ahead and hit that subscribe button and give this video a like. I'll be back tomorrow with more market insights. See you next time.